Is this the beginning of the end for the markets, including Bitcoin and crypto? Let's jump in and take a look as the traditional markets are wrapping up a bit of a down day today. Dow Jones down 1.37, S&P down 1.79, NASDAQ down 1.93. The market has just closed, so we'll see a little bit of ringing, continuing to sell off a little bit more as the market closes down. Bonds right now, the 10-year made a rebound. And if we take a look at the entire bond market, let's see what we've got here. Bonds, there we go. Take a look at the entire bond market. The 1-year spiked quite a bit, as well as the 2-year and the 10-year, which was easing pressure off of mortgage rates down to about in the 6s again. Some rates in the 5s, which historically is not bad, but compared to the last couple of years, that's terrible because it's twice what it was in the last couple of years, kind of like gas prices, right? They're down a little bit, but they're still way higher than they should be, way higher than they need to be. And a lot of people are feeling that pressure, which was the message from the Fed the other day. This whole, downslide is worries of further Fed rate hikes right now. The telegraphing by the Fed is possibly a 50 basis point rate hike instead of 75, but we did get some strong job market news after that. We've got inflation print coming up next week. So that will definitely give the Fed more ammunition in terms of what to do, whether to hold with 50 or to do another 75. So it could be 50-50. This meeting, next meeting, December, January, it could be 75, 50. It could be, all kinds of scenarios, but everybody's debating what the Fed is going to do. And in other news, we had some interesting articles out earlier today. Obviously, everybody's still talking about Sam Bankman-Fried, what he's doing, and his PR tour, and asking why is he not in jail yet. And the reason is, even though things look like they're pretty obvious in terms of him or them stealing customer deposits, using them for whatever they were using it for to keep Alameda afloat, to buy properties, to pay for their lifestyles, whatever they were using it for, allegedly, that has to be proven, right? You can't just arrest them just because the business failed and they filed bankruptcy. You got to go in, gather the documents, the evidence, and things like that in order to just grab them and lock them up. So they can't just put him in handcuffs and take him away, because right now they have to prove or get at least an indictment that there's been a crime committed for an arrest. So I think the Justice Department and the SEC and probably the CFTC are all, along with the Secret Service, I'm sure, the FBI, they're all working on that. I am positive of that, trying to build a case and find out if there has been criminal activity, if there was in fact a theft of customer assets and funds. And then, of course, the Bahamas. I have no idea how they handle things down there and what they're up to, and what they're doing and how seriously they're really taking this. I know that they had an individual come out and say that they're taking it very serious and they're looking into everything and doing whatever they can. But who knows? I don't know what they do there. He's obviously in the Bahamas for a reason and not leaving. The other interesting thing is, but Tim Draper predicts Bitcoin will reach 250,000 next year, despite FTX collapse. The dam is about to break. So what he is saying basically is that he's extended his prediction by 6 months. He originally said it was going to hit 250K last year by the end of the year. He's extending it by 6 months. Bitcoin would need to do a 14x in order to get there. That's 1,400%. And basically, what he's saying is that most of the people in the space are men. He's saying the dam is about to break because his assumption is that since women control 80% of the retail spending and only 1 in 7 Bitcoin wallets are currently held by women, the dam is about to break. So retailers will save roughly 2% on every purchase made in Bitcoin versus dollars, he added. Once retailers realize that 2% can double their profits, Bitcoin will become ubiquitous. So he's thinking that retailers are going to switch to taking and accepting Bitcoin, that females are going to start investing in Bitcoin because females make all the investment decisions in their household, and there aren't that many females in the space, overall. So that's where he's getting his numbers from in his prediction. But at the same time, another company came out today and said that Bitcoin could hit $5,000. And that article was also on CNBC today. One of the institutional investment funds out there or advisory firms out there said that Bitcoin could potentially hit as low as $5,000 in 2023. So let's look and see if we can find that one. You can't even find anything on $5,000. Everything says, yeah, Standard Chartered says that Bitcoin could fall to $5,000 in 2023 as part of their research on potential market surprises next year. So again, another opinion, another research paper. They're not giving any reason other than yields plunge along with technology shares. And while the Bitcoin sell-off decelerates, the damage has been done. More and more crypto firms and exchanges find themselves with insufficient liquidity, leading to further bankruptcies and a collapse in investor confidence and digital assets. So they're saying that that could take it down to 5,000. So we have 250,000, 5,000. My bet is it's somewhere in between those two. Is where I think that could possibly land. So let's jump in and take a look at the chart, see what's going on. As we talked about, this rollover here, the Dow is starting to unwind this move. It did breach the August high. NASDAQ did not breach that August high, and the S&P did not. Everything rolling over a little bit. The VIX bounced off of that 19 level like we talked about. This is, generally the way this bear market has worked. If you bought the VIX at the 19-20 range and sold in the 30 range, then that was generally a good bet overall. And let's take a look at the last time it was down in that range, which this exceeded recently, the 19. That was back in August, and then again in April, March, April. And we looked at that on the indices recently. There's the Dixie getting a little bounce right here in this area of support. And then, of course, the 10-year getting a little bounce here. Question is, will they continue, or is that over for the cycle? So we'll just have to wait and see what happens. But if the Fed holds course, raises rates 75 basis points, the market's going to continue to price that in. This downtrend could continue, which is just lower highs, lower lows. Here is the March, April timeframe right here. That was a 20-something% drop on the Dow. This is August, obviously. That's when the VIX was at 19. VIX was at 19. Same thing on the NASDAQ, March, April right here, August right here. On the S&P, March, April, August. How does that relate to Bitcoin? Since Bitcoin today has continued to hold up close to 17,000, kind of had this level up, bounced it around in that 16.8 to 17.4. Like I said last week, I expected it could get up to 17.5, didn't quite make it there. So where was, let me see, here is March, April on Bitcoin, and here is August on Bitcoin. So Bitcoin experienced, the last time the VIX was in that area, a downtrend as well. The interesting thing to look at on Bitcoin is these peaks right here after a drop. Bitcoin generally does not come back and exceed the wick of the low in these areas right here. It did in this area. This was the Do Kwon, Michael Saylor manipulative buying area right here that kept price stacked up. But once it dropped, it did not rebound back above the wick low of that range right there. When it dropped here, this bounce did not exceed that wick low. Then it dropped again, and this bounce did not exceed that wick low. Again, this bounce did not exceed the wick low. And then once again, we are right here where this bounce did not get back to that 17.5 wick low right here across to here. So what's happening is a pretty consistent continuation of lower highs and a continuation of lower lows. And these bear market bounces are not breaking the wick low levels of these previous little drops that Bitcoin is undertaking. And as we have seen on all of these little drops as well, that generally price will prop up, consolidate for a little bit, and then drop down to the next level, kind of like right here. Props up, consolidates at this higher level, bounces, and then has one final bounce, then a drop. So it popped up, consolidating, right here, popped up, consolidated and rose a little bit, dropped, popped up, consolidated a little bit, dropped. So it's kind of repeating this little pattern over and over and over before the next leg down, where it drops below that last level of a wick low. So right in this area where price drops past that last level of the wick low there, right here, and then kind of works its way down, and then puts in a wick, bounces back up, and then starts to consolidate in that level like that, and maybe pops back up before another leg down and does not exceed this bounce, will not exceed that. So that's something like you could potentially see right there, dropping it down to that next 12 to potentially 14.5 level. If in fact Bitcoin does take the next leg down in price action like we've been looking at. Let's take a look at Ethereum, kind of working the same angle in terms of the downtrend, a little bit more violent action because of the ETH merge and what's been going on there. But at the end of the day, lower highs, lower lows. So we're on lower low watch now for Bitcoin, Ethereum, XRP kind of doing the same thing. You know, news about the case comes out, XRP pops and then just unwinds and gives it all up. Cardano, same thing. Any kind of news about Cardano, you get these little pops and then it kind of just unwinds. So everything kind of in the same boat right now as far as the entire space of crypto because of the risk-off environment. I mean, it's really that simple. Risk on, risk off. The Fed is tightening. The market is wanting to hear stop, slow down, pivot. But right now, the Fed's not talking about slowing down. They're not talking about pivoting. They're saying that we can potentially reduce the pace of rate hikes, but they're still hiking rates. They still have the battle against inflation. They still have a strong labor market. They still have a strong consumer. So the appearance is that what they've done has not really had a huge effect on the market. We've seen some layoffs in the tech sector, but those were bloated payrolls to begin with. A lot of jobs that probably weren't even necessary were eliminated in those companies, redundant positions, and they were on hiring sprees, looking for expanded growth, exponential growth to continue when every tech company reaches critical mass at some point, potentially becomes obsolete at some point. So a lot of tech companies are facing an existential crisis, kind of like Netflix, kind of like other companies of the past have and other technologies in the past have. And some of them are just facing the reality that you can't grow exponentially forever, that sooner or later, exponential gains, exponential growth kind of tapers off a little bit and you start reaching normal nominal levels. And then you have to rein the business in to become profitable. So right now, the markets have priced in interest rate risk. They've priced in inflation risk. They have not priced in the Fed continuing to stay the course and the results of that, which is recession, which that debate will heat up as we get into Q1 next year. But for now, like I said last week, drive the markets down so you can have a nice fat rally so that everybody can get their bonuses. And then we continue with business as usual into next year. So right now I'm on lower high watch, see if we can test those October lows to see if that theory is correct, that the market makers and the funds, investment managers and banks are going to drive prices back down to the October lows, maybe breach them a little bit, then get another big rally like we just saw, about 20%. So everybody can get their bonuses, enjoy a nice Christmas, and then we continue with where the market's going to go next year. So these are the things I'm looking at. I'll see you in the next video.